Time for Craig's Common Sense. Craig Bolanos is the CEO and founder of Wealth Management Group. Craig, 2023 is winding down. Are there some year-end financial moves that investors can do now to make the most of their money? This is a busy time for investors.
Well, there's a lot of stuff that comes in a financial sense when we enter the fourth quarter of each year. But Angela, here's my short list. The first thing right now needs to be tax loss trading, fixed income swapping, capital gains harvesting, and everyone should be paying close attention to their investment portfolio and assess how to manage those capital gains, avoid year-end phantom income distributions. And I just say something we've talked about on your show before, Angela, everybody should have a capital gains budget that they work within each year, because again, some people under the current tax code actually have a 0% capital gains rate. Some people pay 15, some pay 20. Everyone needs to own their numbers to control a desirable outcome. Part number two, we need to be maximizing those retirement contributions and not forgetting about the after-tax opportunity. That means maxing out our 401ks, doing catch-ups if we can, contributing to our individual retirement accounts, again, doing catch-ups if we're allowed. And don't forget the health savings account. Who doesn't want to have a preordained bucket of money from which to pay retiree healthcare expenses that's triple tax preferenced? And of course, Angela, on your show, we did something not that long ago on the mega, that's right, the mega Roth 401k. I mean, there's an opportunity for some to stick an additional $43,000 into the tax-free safety zone each year. We should examine that and do it. And don't forget RMDs as we come into the month of December. Those are the required minimum distributions. You got to start taking them at 73. Over the next 10 years, it's going to grow to the age of 75. But the one I see people get wrong all the time is inherited IRAs. If you've inherited an IRA, make sure you're adhering to your distribution schedule.
Any other suggestions for year-end planning? I like that you've mentioned contingency plans in the past.
Well, yeah, no, Angela, you're right. Unforeseen events can and sometimes do occur. And people should use the end of the year as an opportunity to update or create, if they don't have one, a contingency plan. And part of it's simple, part's more complex. The simple is, yeah, everybody should have an emergency fund. I think on top of that, people should have a liquidity bucket, especially when we're in retirement or about to enter retirement, meaning there needs to be several years worth of expenses sitting in various forms of fixed income that can hold their value, because you never want to be forced to sell stocks when prices are low. And don't forget checking into your insurance and your estate plan. All that's a part of the contingency. But Angela, I've got one more. Everyone should be evaluating right now the impact of rising rates. I mean, the prime lending rate, yes, the prime lending rate is 8.5% today. 8.5%. When was the last time we saw that? And that is adversely affecting future car loans that people need to get, student loan borrowing. It's currently affecting home equity lines of credit, credit cards, personal loans. But there's another side to evaluating the impact of rising rates. It's an opportunity. With a prime lending rate at 8.5, people shouldn't be surprised that money markets look good. Starting bond yields are the best they've been in nearly a decade and a half. And all that means we have great opportunities for income, especially for those moving in and through retirement. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We want to help you get retired and stay retired. Connect with us on the web, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.